And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody out there. Welcome to the Coach's Playbook Tuesday, last day of January, 1 month down, 11 to go in 2023. Today, we're talking about trading plans. It's going to be delightful, I assure you. You will be delighted if you're into this sort of thing. First, speaking of which, Mick, do we have a trader shout out today?
Dan's got one for us.
Danny boy?
I do. Andy, who is up $8,900 trading the NASDAQ today, had a nice trade on in that rally here since the open, and wrote it out really nicely.
Good for him. For the first time in a while. We'll see what happens in the next couple of weeks, but market's been looking a little bit better. Data's been kind of good. Will Jay Powell kill us tomorrow? Probably. But there's a light at the end of the tunnel, maybe. And to take advantage of that, you're going to want to have your trading plan. So today we wanted to talk a little bit about how you go about creating one. And I'd like to start by, I use this, so bear with me, guys, because I said this right before we came on. But your trading plan is a little bit like a workout plan, where really there's a million different ways to do it. But the important thing is that you have one, you stick to it, and you make adjustments as you go to monitor your progress. So I was thinking maybe today, because Hogue, you talk to a lot of traders about their plans and what works, and with Make Hogue Money, if you want to talk a little bit about your career professionally, how you went about developing trading plans and what sort of things you looked at.
Well, it wasn't necessarily something that was really on my mind at the beginning. When I was a proprietary trader, it was pit trading. Everybody kind of started out as a scalper, and the plan was simply try and buy the bid or sell the offer, add, rinse, and repeat. It wasn't until I started looking at the markets in a little bit longer time frame before I started really thinking about putting a trading plan together. And of course, to do so, you if you're brand new at trading, I suggest staying in sim, playing, testing everything, looking at the different tools that traders use, and trying to seek what speaks to you. Now, as a young trader, it wasn't until I started looking at the market profile and using that as part of my trading plan where I was able to find any degree of what we might call success. So that was, something that I learned along the way. And as Jack said, your trading plan it's a living document.
Mm-hmm.
It's something that's going to change over time as you learn more and as you adapt and grow as a trader. So my thing that I would tell somebody is start simple. Find, of course, your tools, your product that you're going to be trading, and I do suggest starting with one product, of course, and then just keep working that trading plan. If the trading plan, it should include kind of a short list here, the preparation for the trading day.
Mm-hmm.
What are you looking at? What tools are you looking at? Long time frame down to short time frame. Put together your hypotheses as to what you think is going to happen, and then see which one of those hypotheses rings true and trade to that strategy. So, it's, again, something that it continues to adapt even to this day for me. And it's just getting started and making gentle changes in trajectory on your trading plan from moving forward. And again, it is a living document. It will change over time.
Before I get to Mick and Dan, I just wanted to kind of put forward that I think sometimes people confuse a trading plan with their trading strategy. And there's a lot of overlap there, but a trading plan is slightly different. It's your business plan. And the first things you should be looking at aren't which indicators you're going to put on your charts to do whatever. It's basically like you would give a pitch for a business. It's what sort of return am I trying to look? What kind of capital is available to me? What kind of return am I looking for? And how will my risk sort of allow that to be possible? Right. Before you even start about how you're going to be trading, it's how much I have available, and then what I'm going to do as far as I think people don't think enough about. So how much am I really going to risk in a day or per trade? And then how am I going to scale that up if it's working or down if it's not? So I think those are definitely the things that I would be looking at first. Mick, you're big into the business plan portion of this stuff. Is there anything else you'd be looking at there or anything you do differently?
Well, I think you guys covered it pretty well, but just to reiterate what you said, I mean, your trading plan is a business plan, and it's so important to have a business plan in place. Businesses that run or operate that don't have a plan, they will flail. And if you flail, you might fail. Same thing with trading. If you don't have a plan in place, you might find yourself flailing. Flailing in leverage futures markets is not a place you want to be flailing. So chances are your odds of failing are going to be much higher. I really like what I heard about, this doc being or this plan being a living, breathing thing that will change over time. Doesn't mean you make exceptions to your plan. You really need to stick to these plans. One thing I've heard from so many traders is, I didn't stick to my plan today. I did something that I knew and actively said I shouldn't do this, but they did it anyways. We have to always remember that when we put together a plan, we've put some time and thought into it. We're looking at things when we're creating our plans through a clear lens that doesn't have emotions in it. When you're actively trading, especially when you're finding yourselves down money in the markets, you start to get emotional, and that's when it's really easy to deviate from the plan. I think a good example so we talked about there's a bunch of different types of plans out there and whatnot. Somewhere where my trading plan or plans have differed from Jack's, I've never included goals in my trading plan or my business plan. Maybe that's bad, but it's worked for me. My plan has focused mostly on the risk and my limitations to protect myself. So, and my whole reasoning behind that is I don't know what the markets are going to do. So, having goals is very important. I've always made a separation between my trading plan and my goals, because goals in my experience, or at least to date, have been more situational based. If I see an opportunity in the markets, I may have a goal for that trade or for this period of time or for that market environment. But definitely, biggest part of my plan is prepping for scenarios. What am I going to be doing if I'm up X amount of money? I know if I'm, up a couple $1,000s on a day, I need to keep a certain percentage of that. What percentage of that, is going to be situationally based or P&L based? I might want to make sure I hold on to 50% of significant profits. But as those profits become more significant, I'm going to want to make sure I'm holding on to a larger percent than just half of my profits. So those are some things I think about. One other thing I want to share from myself personally, because I think when it comes to talking about plans, talking about shared experiences is very helpful. I've drafted these plans, and as I've worked with the plan that I've drafted, I have added things to the trading plan based off of learnings and things that I've done wrong. So I've taken an approach, okay, these are smart ideas for money management. I put them in the plan. But then afterwards, if I find myself, having, whether it was a mistake or not, incurring losses and learning new things, it's like, how can I bake this into my plan to remember this for the next time this scenario comes about? So living, breathing document, have the plan, don't flail, and build on it. But certainly, people underestimate the discipline that's required to be successful in this business. It is so easy to do things that you want and not do things that you need to do. Sticking to your plan and having the discipline to do something that you know is smart but not what you want to do is very, very tough. And I've said it to a number of traders. I don't think I've said it on this segment, but that discipline is really what separates people who will find success in the future and those that won't find success in the future.
Following your plan and recording and tracking your progress are habits of people that tend to have much better outcomes. And I like what you said about goals, in that they work for some people, but you don't want to let goals have this tendency to drag you into suboptimal decisions sometimes, because
100%.
you're trying to make up for lost time, and then you're pushing too hard to hit some arbitrary goal, and then that's
Very
when
well put.
disaster strikes. Dan, I have a good question for you, but first I was going to remark on what Hoke said about studying one product when you start. That's a huge one too. It's much better in this industry to be you don't want to be a jack of all trades and a master of none. It's
But a master of none is always better than a master of one. Let's finish the quote.
Yes, sure. Thank you, Dan, the quote man. Always got his quotes. So the reason for that is it's much better to say any liquid market. You can trade any liquid futures market out there that you want. They all have the ability for you to profit in them. But by focusing on one, you'll get a much better idea of how to read the overflow, knowing the numbers, getting the feel for the market. But because I'm a bond man, I'm going to throw in here. Most of you, let's be honest, are NQ or ES traders. I'd lean more towards the ES. I think it's a great market to trade. If there's one other market to learn about, even if you don't trade it, treasuries. Smart money, like a lot. That's where a lot of the action is happening there. And you will sound smart at trader cocktail parties or whatever else. They still have those. Dan, I was going to ask you. So we've talked about sort of as a business plan. I want to get more into how strategies are developed. And I was kind of curious within your career, because it probably followed a similar trajectory as mine, where I basically learned to trade by having mentors in professional business and kind of starting by doing pretty much exactly what they're doing. And then once I understood the nuances, going from there. How have you sort of developed? Because you have a pretty clearly defined way you trade. So like, how did that form over time as far as your plan?
Screwing up a lot.
Yeah, you learn more from that.
Like,
Seriously.
to be completely blunt, like I spent a long time, buying tops, looking for breakouts, selling bottoms, looking for breakouts. I did that a lot. I still see it sometimes, and I think, man, maybe there's a breakout trade here. And it ate me up. It goes back to that whole point about talking about tracking. What was I doing today? Where did it work? Where did it go wrong? But for me, like my start really it started with what Mick talked about in this concept of like, we're going to tell you a little bit about your execution and things to look for execution. You got to get a feel for it, right? You go through a lot of process. It's not like someone hands you a piece of paper and says, if the market does this, you buy. If the market does this, you sell it. There's nothing like that. For us, it was, I came in under a market maker and we had to fill orders as they came to the pit. Your job was to create liquidity and then find a way to make money with the position you put on. And so it was really a matter of like, okay, I got to figure out how am I going to quote this? And where am I going to be able to take the risk on these trades? So it started for me, really came down to, we're going to teach you how to get trades, how to put trades on, what kind of trades to look for. And really, we had a pretty defined thing off the start of like, we're trading front month. We don't trade back, we don't trade the second month until 2 weeks prior to expiration or 3 weeks prior to expiration. We had a pretty detailed system in that front. But it really came down to, you need to learn your risk limits. Mm-hmm. Where are your controls? Where are your risks? Over time, I've really developed that. And personally, I actually find that one of my strengths is cutting the day early, getting out when I need to get out. I don't like to take that aggressive risk. So where I differ from Mick is, to me, my plan nowadays starts off with goals. And they're not lofty goals. We're a standard business. You're looking for X amount of growth year over year. We want to kind of create goals that maybe are a little lofty, going to be tough to get to. For me, my goals are not based off of the year before. They're not based off of what I think the next year is going to bring. They're based off of where I need to be to continue in this industry. And that's where I need to start. And what that does is that helps me maintain reasonable expectations. You know, if I'm looking for where I want to be at the end of this year, I know how much money I need to make. I know how I need to get there. And it reminds me, when I start looking at this big number, it starts off kind of big, but when you start breaking it down to a quarter, to the month, to the week, to even the day, it becomes a lot more attainable. And again, these are not like lofty goals. They're just enough to squeak through. And that's where I need to be in myself, because it helps remind me, okay, I want to be at X, but really I only need to be at Y. And so that's where I start. And then the strategy side, Jack, going back to your question here, I got there by a lot of trial and error, a lot of screwing up, a lot of note taking. And I just kept going back to, where am I going wrong? And how do I do the opposite? I mean, how many times have you heard, I guarantee each one of you guys have had someone, a mentor, someone in the industry say, you go up to them and, geez, I've had a rough month. I feel like I'm taking loss after loss. And they go, do the opposite.
Yeah.
I'm like, it sounds kind of silly, but it worked for me. Like, I wasn't necessarily doing just the opposite, but I was trying to figure out where I was going wrong and how am I going to make money, because I like my entries because it really accelerated against me. I like getting in at that price. You know, how do I turn this around and make money on those? And that's really what it came down for me.
Call it the Costanza trade.
Yeah, it starts to do the opposite. And then I create a strategy out of that. And over time, I start looking at where's my risk in these trades, and not just my actual P&L, but actually looking back, for this trade to have been successful, you know, how much did I need to risk? And I annotated that. And I started creating all these trackings on, okay, if I got in this trade, I needed 10 points of risk, or I needed 3 points of risk, or I needed 8 points. And I start to find where that median is. And I go, okay, that median is in a good place 75% of the time. So if I cut my risk down, I can take these trades and I can extend my profit targets, because my profit target became the median that pushes it further. And that's where I can find those 4-to-1, 5-to-1, 6-to-1, sometimes 8 and 10-to-1 trades, because I've been able to annotate those details.
And if you can dictate why the opposite makes sense, that reminds me of struggles that I have had too. And I think a lot of people will relate to this if you're trading outrights, is, for instance, maybe the opposite in your case is that you're just being too contrarian. Like, we see a lot of people trying to pick bottoms and pick tops, and really the opposite of there is that you should be going with moves more, which that's kind of a light bulb for a lot of people. If you're like always trying to fade something, maybe try something else there. And
trend is your friend is a cliche for a reason.
It is. And you reminded me, Dan, like how much I've mentally deteriorated over the last 10 years. There used to be, like, when you're market making, stuff like that, there was so much math on the fly in your head, with like people yelling at you to be like, okay, what do I have on now? I think I need that in my life to keep my mental acuity up there. So yeah. And as far as strategies too, Hogue mentioned, and we'll go back to Hogue now, about starting simple. I think people gravitate a little bit too much towards, well, I have a strategy, it's got to include, I can't tell you how many times and I don't claim to be the most knowledgeable trader in the world, but I have spent a good while around it. How many times that I'm answering comments like Hogue when we do a class or something, and you too the other day, where people will like be like, are you looking at this, and put some indicator or something in there that I then have to go to Google and look up. I am like, what the hell is this? I have never heard of this. I think that when you're getting started, you can do a lot of good just by looking at past important levels, settlements, and, you know, volume and open interest are kind of things, and moving averages for me. But like, I think if you just start focusing on those sorts of things to start, it'll put you in a good place. You don't need to be too fancy, right?
100%. You know, there's swing highs, swing lows. You know, those can be good levels to kind of look at. Of course, your moving averages can be good. I'm always considering, you know, is the market range bound or is it trending? There's a different strategy for both.
Mhm.
So just keeping it that simple is a good place to start.
Mick, I saw you raise your hand there. Very
Thank you for
polite of
calling
you.
on me, teacher. Appreciate it. Yeah, going back to it being simple, you should really be starting out with something that's very simple, easy to, you know, explain to somebody else, but more so like simple to make sure that, hey, when you're, you know, the thing with trading is you should plan ahead of time. So when something's unfolding, you're executing right then and there, and you don't have to think about what you're doing. You're basically reacting because you already had a plan. Keeping things simple to the point where you can remember all of these things in your plan is really important. You're not going to be doing yourself a service if you, I don't want to say take this a little too seriously because it is serious stuff, but if you cram your trading plan with a bunch of stuff to the point where you can't remember what course of action you're supposed to be taking, you're doing yourself a great disservice. So really start simple. As you learn, build on it. As you make mistakes, build on it. I wanted to mention, like after Danny was saying, like his trading plan got formulated based off of all the mistakes that he's made in his trading. Mine's the same way. I started off trading, 5-minute charts, flailing, and learned, okay, I can't do that. I can't do that. I can't do that. And I've told this to traders. I don't know if I've said it, on the coach's playbook before, but when you start off trading, think of a funnel. You have this massive opening at the top of the funnel for you to make mistakes. And as you make those mistakes, you better be good about learning from them, because as you learn from them, there's less room for you to actually make these mistakes. So then it just leaves a lot more room for good things to pass through the funnel. So that's exactly how I formulated my plan. Realized I can't do short time frame stuff, can't take big risk on a short time frame, go to a higher time frame, really calculate risk reward levels and whatnot. And it's difficult growing and moving to a higher time frame, but yeah, keep it simple. And your strategies, not your strategy, your plan will evolve as you experience things in the marketplace.
And if you look at the, algos that everyone is afraid of, I mean, I worked at firms that used a lot of those, they're simpler than you think, right? A lot of and don't get me wrong, there's very complex engineering that goes into basically creating speed, eliminating latency, actually putting on the trades. But actually what those sorts of programs are programmed to do is they're not looking at 9 million indicators or something like that. Usually, it's just momentum one way or another. And they're trying to take that into consideration on a short time frame. A lot of the stuff, I mean, if stuff worked, it would become more popular. So if you're getting super obscure sort of stuff, well, usually it's probably obscure for a reason. So definitely if you're doing something that's way too simple, I mean, I have yet to see that, but change things slowly and see what works. But most of all, just to harken back to what we said at the beginning, is focus on risk first and foremost, and just have sound risk management as far as what you're willing to lose on each trade, and kind of go from there. So any other final thoughts, or can Dan hit us with a quote? Well, Mick's got
what you're willing to lose, but more importantly, what you can afford to lose.
Yes. Yeah. Sometimes there's a yawning gap between, unfortunately, what people can lose and what they're willing to lose. And that is called degeneracy. So if you have an issue with that, don't trade, get yourself some help. Dan?
Yeah, first and foremost, go to topstep.com and go to the bottom, find our new Topstep store. We got the Danny trucker hat in stock now, along with a bunch of new nice stuff. So go check it out. So I had to make a plug. I'm pretty excited they named something after me finally.
Yeah, well, I'm getting mine. It's in the mail.
I got a couple of them. I got another one coming. So quote from Dwight D. Eisenhower: "Plans are nothing. Planning is everything." Keep it simple.
Like. All right. Well, thank you very much for tuning in. Hope you found this relevant. Had a great market profile class with Hogue this past week that I think we're going to make public soon, but we'll share that. If you want it, just email me at jack@topstep.com and I'll get it to you.
And there's a
Otherwise,
nice little piece of your trading plan that comes with that.
oh yeah, Hoag's
Ooh.
Hoag's worksheet. Yeah, we're sending out an email today with that, so we'll get you that too. So we're not trying to hide this stuff. Hoag is a benevolent trading educator. He's just putting it out there in the ether. So yeah, we got more trading psychology come up, some exciting things that are in the work. I can't announce yet, but we will have another session with Jared Tendler next month, probably because we'll be out of town at the end of February, probably in early March. But yeah, lots of cool stuff going on. Good time to start trading. Hopefully, Jerome Powell, please be kind.
Yes.
Yeah, I'll send that. So I'll let Hoag, you want to sign it off here?
Sure. Trading plan. I mean, I started with a pretty 1,000-foot view, but it should start with that 40,000-foot view. Your account information, phone numbers, all your logins, all of that stuff should be included in that. But just start it. First thing that getting something done is starting it. Start your trading plan and add it as things go on. We are, as always, looking forward to your success. So get out there and profit. Have a great session.